Hey everybody, this is Jim at SP500chart.com. It's a little bit before 3 o'clock on March 30th, 2014. We're going to take a look at what happened last week, what happened on Friday, see if we can get some feel for what we might expect in the week that starts tomorrow, March 31st. Running into the 1st of April. Before we do that, I need to remind you that the website and this video are for educational purposes only. Nothing stated at the site or in the video is intended to be used as investment advice. I can draw these lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional. I'm just a guy who draws lines on charts. So let's take a look. Well, we've been looking at sort of a range bound area that's really been in effect since the last week of February. All of the trading so far in March has taken place between about 1840 on the low end and 1883 or so, give or take a penny, on the high end. So we've been in this little 43-point range for a good while now. As a matter of fact, if we wanted to kind of describe that with a picture here, we could go back and say that's pretty much it right there. We have been right in and around this range for a bit now. The net result has been that that obviously we have not had any big moves. So therefore, these videos have been getting a little bit redundant at times. Bear with me. And they've also seemed to be the same old, same old. Well, it's because the chart has been the same old, same old. If we back out and take a little bit longer range view of things, you can see why we have this support level around 1840. It's because we still have this pattern back here that looked like it was another one of those inverted and truncated head and shoulders patterns that should be pushing the markets on up to the mid-1900s. But since getting out over this neckline by a technically significant margin, which happened in early March, there just hasn't been a lot of follow-through. So, one of two things is happening. We are either forming a consolidation right here that will eventually take out 1883, and then we get up into the 1900s, or this pattern will fail, and what we've seen over the past 5+ weeks is either a head and shoulders top, or if you ignore this shenanigans over here in late February, a double top. When the double top would have its, quote, neckline right at about 1840, and it would have its resistance line right at about 1883. So if we get above this resistance at 1883, based upon what we've seen over the past 4 weeks, I would expect a move to about 1928. That should also serve to re-energize the markets based upon this larger pattern back here. And I think if we get up to 1928, we will also get up into the 1950s. Now, let's zoom in just a little bit and take a look at what we have been seeing. We've seen a good bit of, well, I want to say volatility by the standards that we have been used to in years past. We've not been volatile. Volatile was when we were in 2010 and we would have 3 and 4% days, or in 2009 when the markets would rally 6% on one day and then be down 8% the next. It was unbelievable. But instead, we're just kind of seeing a lack of commitment one way or another. And you can see this right here. I mentioned on Thursday that it looked to me as if we were making another little bottom pattern back, and this was at the end of the day on Thursday. I said, think of this little area right here as being potentially analogous to what we saw back on the 13th and 14th. And on Friday, we got that nice move upwards. But wouldn't you know, we start to sell off. So that nice high that we had around 1866, we ended up giving away about 10 points of that throughout the day. So again, we're stuck in a market that simply cannot decide, hey, are we going up or are we going down? So therefore, we have been range bound. If we look at this 1840 to 50 area again that I mentioned a little while ago, come on, I want to grab something here, but it won't grab. There we go. If we look at this area here, you can see the last 3 times we got into it, we got a nice bounce. You can also see that the last 3 times the lows line up almost exactly. And at this point, the question is simply, is this bounce going to mount another attack into the low 1800s? Are we going to run up and try to get over this again? You know, I hate to sound this way, but it's sort of anybody's guess. One thing that may help us, however, and I've said that before only to regret those words, but one thing that may help us is if we look at the last 6 or 7 days and try to get a little bit of a definition on what we've seen here. Now, instead of this looking like a neckline, I'm going to make this our light blue color again. Like so. In other words, are we in a situation where we ran up to 1883, then we sold down? Then we broke out of this descending pattern right here, came back up to 1883, but then we started to sell off again. And this line would be sort of potentially similar to this one. So what I'm saying is, if we get over this line at some point in this week of the 30th, March 30th, through April 4th, then if we break out over the top of this, then I think that would likely be our little clue that, yeah, we're going to go up and we're going to give this another go in the mid-1880s. But guys, this has been trying my patience too. I keep thinking it looks like we're ready to either break out of this or we're ready to break down, but instead we're just hanging in the same area. We have a number of areas down here of support that seem to make sense, seem to continue to make sense, and we have some areas of resistance. Now, the idea here that I want to share with you is sometimes going sideways is a good thing. And the reason is this, and I mentioned this earlier in the week. Had we taken out 1883 right here back on the 20th or the 21st, then we would have likely quickly started to run against some resistance right here to begin with, around 1910, around 1908, something where this little light pink line. But if we'd gotten over that, then we would have seen some some strong resistance in the low, in the 1920s, low 1930s. And we know we've got a target that's closer to 1960. So with that in mind, if we continue to go sideways for just a bit and then maybe break out over the 1883s in 4, 5 to 6 sessions, then you can see we've got pretty much, even if we extend this line up, we've got pretty much some fairly clear waters to navigate through that aren't so tangled up with resistance. So right now, as long as we're between 1840 and 1883, this could go either way. because we have a lot of support down here that has been proving itself, and because we have that inverted and truncated head and shoulders pattern with the 1958 target, you know, I don't want to, I can't ignore that, and I can't let my concern over the possible bearish implication of this being a little double top. I think I'm going to hold out, and I'm still going to vote in my own mind in favor of our inverted and truncated head and shoulders pattern. Now you have to make up your own mind. Please don't listen to just me, because I could be wrong on this. But we've seen these things before. What we haven't seen is this little extended sideways action. But when you look at this chart, and if you still think that 1958 is something to be expected, and you look at all of this resistance, most of which is rising, it seems to be a pretty nice setup for eventually getting over 1883, then making our target in such a fashion that we still remain under all of these resistance lines. They are rising at a quick enough and a steep enough ascent to where we can make our target without having to violate any of the implied resistance that we have in every single one of these lines that is rising to the right. The only ones that are not resistance that are rising are the ones that are underneath us, and those should be support. So guys, again, I think it's clear to see, get over 1883, we get up to the 1950s. If we break down under 1840, then I think we come back to about 1800, give or take, give or take a small fraction as a minimum target. So guys, there's your video for the week ending March 28th, 2014. Thanks for watching. Thank you for your support. And if you are not a member at sp500chart.com, think about it. It's pretty cheap. Go by the website and see what the details are. I can tell you this, it's less than a cheap cup of non-premium coffee at just about any place where you can buy non-premium coffee. So thanks for watching again. Take care.